Joining us now is Paul Prager. He is TeraWulf Chairman and CEO. Paul, great to have you with us. I want to talk about the fact that this is a 20-year lease, because taking a look at the sell-side reaction, you had analysts from Bernstein point out that most of your peers, they're still securing 10 to 15-year base contracts. So talk to us about how it all came together in the end.
We have a pretty competitive process. We know Anthropic well. They're up at our Lake Mariner facility. We decided to work with them on this. Duration's important. We have great quality sites, so we're looking for a long-term, high-quality credit as an off-taker. We had a reference design. They were familiar with us. We worked with them. It just seemed like the right thing. And 20 years is the best-in-class lease in this space right now.
So I also wanted to touch on some of the concerns, because, again, reading through the reaction on Wall Street, obviously you saw a lot of that come through in the share movement yesterday. But there is still this concern around here that, OK, you secured this deal with Anthropic, but your customer concentration could be a longer-term concern. So give us the roadmap about, how you begin to address this and how you keep that momentum going.
I don't share that concern. At our Lake Mariner facility, where our customers FluidStack, backed by a Google credit backstop. It's pretty fantastic. Now here we've got a direct lease with Anthropic. I think it's one of the first things they've gone direct on, certainly for this term. They're a great credit. We'll have the lease provides for terms that enable us to get an investment grade backstop. Anthropic has a number of offers. They have to make a decision on whose equipment they want to use, but at the end of the day, this will be an investment grade backstop. Provisions in the lease mandate that, and all systems are go. We're very excited about building out this facility.
I'm curious, Paul, when you bought that center out there in Kentucky, did you already kind of know that Anthropic was going to come on board?
We knew that they were very keen on the site. We had a number of other customers that were interested in the site. We run a process. For us, it's all about getting the best deal we can for our shareholders. But at the end of the day, Anthropic put the most superior deal on the table, and we're excited to work with them again.
Do they hold any expansion rights to any of the other properties, like that one you bought in May, somewhere in eastern Kentucky?
Well, no, but to be honest with you, when you've got somebody at a site and you scale that site up, we think ultimately this is a 500 megawatt site, 401 net. We think that ultimately the site is scalable to a gig. Having somebody there, having worked with them, having a reference design, them having been through all the diligence on the site certainly gives them an advantage, but it's not required. I mean, we're looking for the best deal we can for our stakeholders. We're always going to make that competitive. But I can tell you Anthropic is also a great partner. I mean, when you negotiate with them, they're looking for a win-win. It's not like this is what you get, this is what we get. It's just been a great working relationship. We built, probably the largest data center in the United States in the shortest period of time for them with Google up at our Lake Mariner facility. We like working with them. And as long as the deals make sense for our shareholders, we will hope to continue to do that.
Does Anthropic have any sort of equity stake or any sort of direct stake in the company beyond whatever rent payments they've agreed to?
No.
Okay.
I also want to talk about the other news item from yesterday. In addition to the lease signing with Anthropic, that you also sold your majority stake in the Abernathy joint venture to an investor group led by FluidStack. You're nabbed a profit, or rather that sale going through at $530 million. Why now, and how do you plan to redeploy that cash?
So, I think it was a great transaction for the company. FluidStack always had an option to buy that position. If you recall, we were brought into that opportunity by Google, Anthropic, and FluidStack after that cake was partially baked. They wanted our experience as a developer in managing procurement and EPC companies. They always had the option to take us out. We wanted to make sure we got a superior return. More importantly, it's about opportunity cost. I mean, in that deal, we were half. We weren't leading the development effort. We didn't own the site. That site is not scalable because all the electricity at that site has now been taken up. So we wanted to take that money and recycle it to an opportunity where we are dealing direct with our end user customer, where we get the highest return for our shareholders, where we control the land, control the electricity. So it was a great opportunity for us that came along as we were negotiating the lease with Anthropic for Hawesville.
And let's also talk a little bit about the debt markets, because TeraWulf has really helped to open those markets for other companies. And I'm curious, whether the goal here is to get to investment grade status eventually, and how much more money you plan on raising from capital markets.
Sure. As I indicated in this lease, we have, there are provisions in the lease that mandate we'll have an investment grade credit. We're excited about that. Patrick Fleury, our CFO, I think he's led the leagues here in both transparency and in designing what is financeable in this space. I'm sure we'll do it again. We'll work with Morgan Stanley on that. We're very excited about it. We don't have any indications that we'll do any worse than we've done, and we're certainly hoping to do better. I mean, we're really excited about Anthropic as an end user customer for that duration. 20 years makes a big difference when you look at the financial model.
Paul, really appreciate you taking time for us. We'll catch up soon.
Thank
Paul
you very
Prager.
much for having me.
Absolutely.